Hey everyone, today I'm going to be sharing with you how I was able to make $71,000 in realized gains trading stocks. And I'm going to be sharing that information with you guys here today. So, first off, let me show you real proof. Let's go to Robinhood Legend. I don't know if you guys heard that animation sound. You probably did. Let's click on my account here, and you can kind of see here the realized profit and gains. Now, if you've seen my other video, I'm actually uploading a few different videos here, but I actually showed the period of time of how long it took me to get this far. And I officially started somewhere in technically like mid-September, right? So mid-September, we have all of October and November. So technically 2 months, but really if you want to count it, October, November, and September would technically be 2 months and a half because today is November 11th. So how did I do it? How did I make it happen? The way I made it happen was a few things, right? So I'm doing this YouTube channel to kind of document my journey, to kind of tell you guys about everything that I'm doing. You can kind of see here, year-to-date realized gains, $71,104.75. And I'll kind of tell you how I did this. So when I say officially trading for the past, let's say 2 months and a half, that's what I have been doing for the past 2 months and a half, officially trading. But before that, I was doing very, very, very small trades for the purpose of training. I just wanted to get used to it. I wanted to see what I can do. And I actually did show this, like I said, in one of my past videos. I showed like the profit and loss, things like that. And you can click through those videos and watch. But I was making small trades where I make like $10 profit, $40 profit, $20 profit, $30 profit, just to get a feel for things. And the ideology for me was if I could, just make this money, I could just increase the number, and trade more and do well. And so for me, it's been about a history of creating good predictions with stocks. It's not necessarily been about, doing the analysis and some really hardcore stuff. I do use some tools, some software tools that help me with that and that guide me through the process. But overall, it hasn't been that difficult. And I'll kind of share with you some of my golden rules here. My first golden rule is as much as possible, buy low, sell high. Now, that might sound obvious and cliche, but let me explain what I mean. When you take this buy low, sell high mentality, is that you stick by it. You're not going to sell no matter what unless it's a profit. Okay. I only sold once where I didn't take a profit. Only once. So out of all the different trades, and I've done, I think I could say hundreds of trades. I haven't really counted, but like I said, you guys see the P&L, you guys see the numbers. Out of all the different trades, and I wish I could click on this so it could be a little bit more detailed, but of all the different trades, I've only lost money on one trade, okay? And it was just simply taking too long, and I didn't see a future for it. And what that trade was Rivian. So I could actually show you Rivian stock here and show you how bad it was kind of going. So let me kind of show you, for example. It was around here. I was trading, and it went up like a little bit, and so I sold. I did not predict it for it to kind of reach this high. Would I have loved to sell, at here? For sure, but, it is what it is. But I essentially waited all this time for it to go up, and it just kept going down for me. In fact, if I actually check here the past year, look how bad the stock has been doing for the past year. I mean, it's just been going down, up, 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 down, 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 down. If I check here the past 5 years, look at how bad it's been going. Rivian is essentially, for most cases, a lost cause. I don't think it's going to be able to go up to $40, $50, $60, $100 a share. No way. After especially, reaching its peak of $178 down to like $11, it's not going to be a good stock for the long term at all. So that's why I sold. I didn't want to wait any longer. I don't know exactly how much I lost on it. I mean, I could probably check, but I'll check while I'm on my phone right now talking to you guys. But, I try to really, really live by that the best I can. So I lost $1,523.79 on Rivian. There you go. So it is what it is. But I really, really try to stick to that golden rule: buy low, sell high. And when I stick to that golden rule, what that means is that no matter how high that I buy, it has to be a low, because by definition, I have to wait to sell higher. So I don't sell stock unless it's in the green, unless it's in the profit. That's number one. Number two is I try to make good bets. So what do I mean by that? I look at the history of the stock. Does it have a history of like tanking? Does it have a history of going up, going down? Is it sporadic? Is it volatile? I'll give you a quick example. Like Tesla right now is a scary stock to invest in. Very, very scary, because could Tesla rally up all the way to like 425 right now? Sure. It's at 348. It could. Who would be able to predict this huge rally up from 199 all the way to 348? Really, nobody. But at the same time, is it likely? No. But everything that happens within Tesla is unlikely, and therefore I kind of tend to stay away now from stocks like this. It's just too volatile for me. It's just too much, because what happens is if I put too much in the stock, or even if I put a little bit, I have to, based on my golden rule, which is buy low, sell high, meaning always take a profit, I have to wait. What if it tanks? What if I have to wait 4, 5, 6, 7, 8, 10, 12 months for it? It's not where I want to be. The most I want to wait is 36 hours to sell a stock. That's what I prefer. And the reason why is because I prefer to have this cash flow coming in each and every day. That's just my mentality. Could my mentality change in the future? It could. Some expert traders say, the fewer trades, the better. But at the same time, I like the idea of making money every day. I like doing a lot of trades. That's just my mentality. Now, I could be wrong. It could be an incorrect ideology, but I don't think my stats show that it's wrong. If you see my stats right here, like I said, this is for a period of, let's just say 2 months, 2 months and a half, whatever you want to call it, for 71K. It's not that bad at all. Really, it's not bad at all. And so my goal, and this is really a good video to remind me if I ever forget, is number one, buy low, sell high. So I create a rule for myself: never take a loss on a stock. And the way that I can fortify that rule, and I can, keep going to, keep depending on that rule, is firstly, not making investments that are bad investments. So Tesla, no matter how much money I make on Tesla, at the moment currently is not a good investment. It's just not a good investment. I don't know how long it can go down, how long it could stay down. It could stay down for a few months. It could stay down for, a very long period of time. And I like to trade each and every day. My next rule is get in and get out, meaning get out as fast as possible. Are you leaving money on the table? Yes, you do leave money on the table. There's been plenty of times where I've left thousands of dollars on the table, where I'll make $700 for the day, but really I could have made $2,700. But at the end of the day, get in and get out. It's better to get out than to regret it later, because what it does, it creates another day for trading. There will always be tomorrow to trade. So even if I make a small amount today, it doesn't matter. There's always tomorrow. That's another thing. So where my mentality came from is Robinhood. Robinhood introduced this program called Robinhood Gold. I don't know if I can click on it here. Let's see, because it showed my account information, but I'll show it here. Okay, so you could see here, this is Robinhood Gold. Robinhood Gold gives you a percentage every single day, gives you some money every single day, and it adds it to your account. At the end of the month, you'll have it added to your overall balance. So when you have Robinhood Gold, essentially my goal was, okay, if I can clear my account every day, use the buying power, which is the money that I have, use it, trade with it, make money, and then let the fund settle each and every day, I'll still be making money on Robinhood Gold. And that kind of was my ideology. Now, am I really stepping over pennies for dollars here? Yes and no. The reason why is because could I stay in a stock longer and make money? Yes, but I could also stay in a stock longer and lose money. That stock could go down. So for me, what I plan to do is buy low, sell high, get in, get out, meaning sell for really quickly, make a profit, let the Robinhood money collect, meaning the interest for the day, and then a new day emerges, and some days are high amount of trades and some days are low, but that's kind of been my mentality. Now, what softwares do I use? So I'll kind of share with you here. So this is a software that I built myself. I know it's not pretty right now. I'm working on it, but this is just a tool to help me predict where the stock is going to move based on mathematical equations. And so predicting is the key word here with probability. So that's what this stock does, is it gives me probable reasoning, essentially. So let me give you an example. All right, so not Tesla, but let's look at something a little bit more stable. Robinhood has been actually pretty drastic. I'm not going to pick Robinhood. Like I said, it increased pretty dramatic in the past few days. We're looking at 26% increase. So let's try to look at something a little bit more stable. Verizon is very stable overall. Okay, so let's look at Verizon. So Verizon in the last 3 months has had a low of, let's say, $40.04. Okay, and it's had a high of $45. That's pretty stable overall, but a $5 difference is pretty large for a share like this, but it also is very slow. Its movements are very slow. So, you look at it and you say, okay, well, I don't know what it's going to be tomorrow. It could keep going down. Let's kind of use the probability tool to kind of help us with that. So this is, like I said, a tool that I built that has helped me make some really good predictions over time. It's made me a lot of money. So what's the ticker symbol? Ticker symbol is VZ, right? So I'll go over here and I'll type in VZ and I'll look at the chart from, let's just say, October. When was it at its peak? Let's say somewhere like, let's say September 16th. This is technically not the peak, but I want to incorporate more data. Okay, actually, let's do it twice. Let's go to August 12th. Why not? So VZ, type in VZ here, and I'll go to September, October, November, September, and let's go to September 1st. Why not? Okay, and then today is November 11th, so let's click November 11th and display results. And right now, it's going to display for me all the different results. The closing prices, right? This is the closing prices. So what price does it close at for the day? This is the volume chart, which is very important, right? So I could see how much volume, because volume, remember, volume, supply and demand, if more people are purchasing, that decreases supply, it increases the price, right? If less people are purchasing, it decreases the price. And then we have here the gap. So on the gap on a daily basis between the high and the low. So this just shows essentially the volatility of the stock. So if it's extremely volatile, it will have a huge jump. So if you look here on the October 21st to October 22nd, there was a huge jump here compared to a lot of the other days. I mean, from October 30th to October 31st, that's a big jump as well, right? Here's a big jump from the 3rd of October, September, right? September 4th, September 3rd, around that date. So that's a big jump as well, right? So those are some sort of big jumps that I could look out for. And then in between then, we have these small little jumps, right? And we can look at kind of the pricing. It doesn't really drop past, like a $40 price, as we saw. It doesn't really go too deep, past $40. This chart represents the percentage of the change. Okay, so here represents the gap, but here represents the change percentage. So here we have, for example, a negative 3.5% change. And so if we see a dip like this and it's abnormal, it's probably a good idea to buy more. It's at this point. If I see this in my chart, for example, if tomorrow dips down here, I'll be like, this is a great buy. Let me buy it. And, in a couple of days, it could kind of, lift. And if it lifts even a little bit, I still make money. So I'm looking at charts like this. But more importantly, and we have here the VWAP. Okay, I'm going to make a separate video on VWAP. I'm not even going to go over it because it's, there's a little bit to it. But here we see how the chart kind of compares with volume. So we have the VWAP and the closing prices. And notice how they kind of move together. They kind of move together. Of course, there's some discrepancies, but overall, they kind of move together. And then you have here the volume. And notice how when volume shoots up, the stock overall starts to rise throughout the days, even as volume goes down. That's very interesting, right? So that's pretty important to realize. But anyways, there are things that you can pick up on. Now, once you pick up on the data, you download the data. This is what I do here. I download the data. And then I open up the app again, and then I start looking at my moving average. So what I'll do is I'll take my tool, right? I'll hit choose file, and I'll open up the stock file, right, that I just downloaded, which is raw data CSV, right? I'll just open that up, okay? And then I'll hit analyze, and it will give me some averages here. So if you look here, and for Verizon, it's not a big deal because it's such a slow-moving stock that you don't have to worry about this too much, but it shows me the rounded average. Why is the rounded average important? Because once again, it shows how volatile the stock is. If the rounded average one day was like 32, then the rounded average was 41, then the round average was 31, then 49, then whatever, I can kind of see that. But if I see here for like 5 straight days or 6 straight days, the rounded average is the same, then I know overall it's a safe stock, right? Now, I'm not necessarily looking for this every time, but this is kind of a indicator to me of like, okay, how safe is this overall? Like, does it defy my rules? Where is it a stupid stock to buy? Is it too volatile? Obviously people can make tons of money on volatile stocks, but they can also lose a ton of money. And so that's kind of important. But anyways, here is my favorite tool. This here, the Analyze Estimator page. And so I might rename it. We'll see what I'll do, but open, right? And I'll hit Analyze. And it will tell me, right, the probability of will the stock touch a certain price. So here, it has a 10% likelihood that the stock will touch 39.53. 10% likelihood. So it could happen, but it's not crazy likely that it's going to reach 93.5. Remember, what the stock is at right now is $40.43. Okay? But it has a 45% likelihood that it's going to hit 40. Now, I don't look at this and say, oh my God, 45% chance, let me bank on it. What I'm really looking at is I'm saying, okay, what are the chances that this price is going to go down? And it's a strong chance it's going to go down. Right now, it's at $40.44. It's a strong chance that it's going to go down. And then here it says 55 and 65% likely that it's going to go 40.91 and 40.96. So these are two pretty close ones, right? At 96 or 91, they're pretty close. So let's just assume it's the same number. Let's just call it 93 or 94, $40.94. Let's just say 60% likelihood. If that's the case, and it's a 45% likelihood that it's going to go down, then what the stock price should look like for the day is this like V, right? So it's going to go down a little bit, and then it's going to go up. At least that it's telling me based on the mathematics of it. Now, could I predict human behavior in the future? No, I can't. But I can use statistical likelihood and equations that are pretty advanced, right? That regular people can't just sit down and calculate on a paper and pen, using Six Sigma, using all kinds of different things, using different SPSS, all kinds of different mathematical equations that can predict likelihoods or associations. In psychology, we have correlative data and we have associative data. And this is what we call associative data, where we're not exactly correlating the results, we're not exactly determining results, but we're saying it has a likelihood, it has a probability of XYZ happening. So if I see the price is likely to go down, but also likely to go up, right? I can sit and wait out the day, wait for it to go down. It might not hit 40, but it might go down to 40.20, right? $40.20. It might go down to $40.16. It might go down to $40.12. And that could happen in pre-market hours, And then later throughout the day, it might hit $40.75. It might not hit $40.91. But like I said, the likelihood is strong. Now notice here, in the 3-day prediction price, right, based on the numbers, it shows a higher likelihood that the price is going to go up to 41. So what that indicates to me is that within 3 days, it's likely that the price is going to go up. This is not a guarantee. Once again, this is probability based on past mathematics, based on that whole entire chart that was logged. Now, if we look at the chart that was logged, what was actually logged? Well, let me show you what was logged. So let me kind of open it up here. Open up this numbers file, and I'll kind of show you what was logged, because it's crucially important that you understand kind of where I'm picking things and why I'm picking things, right? So look at what's logged here. Look at the information that's required for this, for this to actually work. So let me pull this up here. Let me decrease this. And let's look at this file. And like I said, this is an app that I built that uses all of these kind of data points at the same time. So it uses the date. It uses the open of the date, the high of the date. It uses the low and the close. So open and close, it uses high and low for the day. It uses the adjusted close, the volume for the date, the unadjusted volume. It uses the change parameter. It uses the percentage in change, the VWAP. It uses the date, the actual date, like November, whatever, which is the same thing as this. This is just the label for it. The change over time, right? And then we have our theta, okay? So we have all kinds of different data points and data markers. I'm not going to sit here and explain every single one of them, but this is the raw data. And what it does is it analyzes based on it. So I can look at things like linear regression. In statistics, we have something called linear regression. And I can look that the predicted average for the next day is 41.55. Now, it might not actually hit 41.55, but what really matters and what's the important part is this, is that, okay, this is telling me it's going to hit 41.45. Is 41.55 above what it currently sits at, which is 40.45? The answer is yes. Remember what we did here? Is it going to go above with the predictions? Are these two numbers above this current number? Yes. So for me, if I really, really, really wanted to buy right now, would it be a good buy? Overall, it would be a good buy, because what the tool is telling me is that there is a likelihood on two different indicators that I'm using, on two different parameters that I'm using, that there is a likelihood the stock will go up. And I could just buy it from right here, right now, and then set it for sale and just go to sleep. And then when it sells, it sells. You know, that's an idea. So here we have our moving average, right? So I can calculate my moving average. I already showed you this, but these are, like I said, different tools that help me value, is it a good stock to pick, okay? Without kind of sitting there and doing all the indicators and doing the resistance and doing all that kind of stuff, this kind of alleviates that for me. Calculate the VAR. What is the VAR? Well, it's risk management. So it's like, if I do buy, what could possibly happen? What's like the worst that could happen? And so here it is. So here, with 95% confidence, right, that the absolute highest possible damage that could happen to me is a decrease in 2.11%. So I look at that and I say, okay, with 95% chance of 2.1%, the stock price would decrease. What does that really equate to? That equates to about $1, right? And then I say to myself, okay, so if the stock price goes down $1 and I buy today, how likely is it to go up, right? Because it's telling me that worst case scenario at 95%, you know, if the stock, if it went to a 95% extreme, right? What is the likelihood that it will go down? It will go down roughly $1, right? It could go down a little bit more, but roughly $1, because this is 1.22% and it's down 50 cents. So roughly $1, right? Maybe a little bit less than $1, more like 80 cents, right? So if the stock price was to go down 80 cents, is it logical that it's a safe buy? The answer is absolutely. Why? Because I look at the stock and I say, okay, even if it went down 80 cents and I purchased, right, within the next, like, well, let's say day, and I purchased, and it goes down 80 cents, well, what's the likelihood that it's going to go up? The answer is it has a high likelihood it's going to go up. Look how high it went before. So is it really that severe? The answer is no. Could an 80-cent drop actually happen in a day? For sure it can. Anything can happen. But is it likely? Is it probable? No. And this is kind of my final message, is like, when I pick these stocks, what is probable and what is possible are two completely different things. It is possible that Verizon can shoot down to 1 penny tomorrow in value per share. It's possible. But is it probable? Is it likely? Is it probable, meaning is there probability that it will happen? The answer is no. Okay? And so what this tool is for me, and I have built this tool, is it probable? Is it likely that it will actually happen? It's giving me certain data of what will happen. That's what this tool is. It's giving me the probability that something will happen, whether the price goes down or whether it goes up, based on my assessment, right? So I can look at momentum by giving it the past history, and it's giving me these momentum indicators, right? So the lower the momentum indicator means it's probably not going to travel as high as it could. And here's like practical examples, right? So here you can see a momentum of 1.05 versus 3.22. Well, 3.22 was yesterday's indication, right? And the day before and the day before. So this is like the weekend, right? So technically not the weekend, but let's look at it this way, right? We have I'll just pick a random date. Okay, let's say the 17th of last month, so September, 0.24. Okay, so let's pull that up, 17th of September. Let's see, 3 months here, 17th of September. So here's the 17th of September. Does this look like a big drop to you? The answer is no, right? And it was actually a negative number the day after, so there you kind of go. You get to see how the momentum kind of works. It's not a big drop. And all it's working on is past data. So that's what this tool does for me. I'm not, it's past data. I've been working on this tool for myself, kind of using it to build for me a probability indicator tool, like a measurement tool that measures the likelihood that the price will either go up or down. And that's what I kind of use as well. So that's kind of how I made, 71,000 in the last two months, pretty much. Trading stocks as a complete newbie. This is my first real 2 months of trading in my lifetime. So hopefully you guys enjoy, and I'll talk to you soon. All right, peace out, bye.